Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is August 2nd, 2023. We're going to cover the stock market, bond market, and precious metals. We'll begin with the dashboard. This is a view of last week, particularly in the yellow box. The yellow box covers the last week. The pink box covers year to date. So what I'm doing here is looking at the top six major indexes from the highest performer year to date to the lowest. And at the bottom, I've got long-term government bonds, which I always show. So it's a tale of two markets. The equity markets represented by the NASDAQ 100, the Dow, the Russell 2000, and the S&P, so NASDAQ, S&P, Dow, and Russell. Those four, and then two foreign markets, the emerging markets and developed markets, and then the long-term government bond. So and then on the right side, these are the moving averages, the 20, 50, 100, and 200-day moving averages. So is this index above or below the moving averages? If it's above, it's a green dot. If it's below the moving average, it's a red dot. So you can see those the top six lines, all six of them are positive, including the two foreign markets. So we've got literally all six in all time periods are positive. So that's good. The market, the equity market, is going up. It is clearly positive. At the very bottom are the government bonds, and you'll see, I'll show you a chart in a minute, negative. They're not crashing, they're just not going up. The general direction is down. And again, I'll comment on it later. But on the equity side, very favorable. The NASDAQ 100 is the strongest. Year to date up 44%, S&P up 19%. And then it goes on down from there, and the Dow is the smallest, down about 7%, or up about 7%. Breaking it apart, it's the same story. So you break the S&P 500 apart into its 11 sectors, and again, these are equity sectors. So they are, generally speaking, over all four periods, moving averages, 20, 50, 100, and 200, are generally all positive. Year to date, you can see the rates of return, technology leading the way. Right behind it is consumer discretionary, up 33%. And then it drops way off after that into industrials, retail, basic materials, and then really down after that, and three of them are even negative year to date. But that's the way sectors are. And I commented before, but the ones on the bottom were on top last year, and the ones on top were on the bottom last year, pretty much. And that data is through this past Friday. Now take a look at the chart of the S&P 500. Now, when I think of the S&P 500, it goes up and down, like most stock indexes. I think of it kind of like a roller coaster, like that. Well, it doesn't just go sideways up and down like a roller coaster. It goes uphill like a roller coaster, but it goes way up and then way down, and then way up and way down. And the highs over a long period of time are higher, and the lows are higher over a long period of time. But when you see it at a low point, you can probably correctly say what's probably coming pretty soon is a move up. When you see it at a high point, you can probably say, think like roller coaster, you can probably say it's not far. The further up it goes, like a roller coaster, the further down it's going to fall. The more you think this thing has got south written on it. And when I looked at this chart, I thought this can go higher, but I think this has got to move down at some point where it's got to correct. It's gone up too much in a too steep of an upward trajectory to sustain itself. And the video that I did yesterday talks about the influence of AI on the S&P 500 and on other indexes, and that's what's pulling it up mostly, is the AI type stocks. And so it's exaggerated to the upside. Valuations are very high. It's overbought by all standards, but we're invested in it, and we're going to stay invested, and until we don't, But I just thought I would show that because it's definitely since actually about October, but especially since the beginning of the year or March, definitely been in an upward trajectory. Growth versus value. Now this is a relative strength chart. I'm showing growth as the numerator, value as the denominator. And so when it goes up, this is favoring growth type stocks. When it goes down, it is favoring value type stocks. And these are the indexes. SPY-G and SPY-V are the stocks that are in the S&P 500 in one of those two categories, growth or value. So you can see from my black arrow that generally speaking, growth is in favor. There have been periods, certainly periods in here where value has been in favor, and but now growth is in favor. When I do another relative strength chart showing the S&P 500 as the numerator and small cap as the denominator, what this says that if this goes up, this favors larger companies. They are going up faster than smaller companies. When it goes down, smaller companies are doing better. So you can see for the past month or so, it has pulled back, and that means that smaller companies have done better than larger companies during that short period. But going back to about March, during this run we've had, you'd clearly say that it's favored the larger companies, which have been the ones, the Google, Apple, Microsoft type companies. Those are the ones who have been heavy investors in AI. The long-term government bond had a horrible year last year, absolutely horrible, and in some cases worse than stocks, and stocks had a bad year. So, but this year, when stocks took off, bonds did not. So a bad year last year and an anemic to negative year this year. So this has put both, last year especially, and this year are putting a drag on 60-40 portfolios. So if those that are with traditional advisors or use traditional 60-40 stock bond portfolios, this is not helping. The US dollar, represented by the ETF UUP, has been in a decline since about October. It's gone up and down, but generally speaking has been in a downward trajectory. Gold, represented by the ETF GLD, has been in an upward trajectory since October, November, and again, it's gone up and down, but generally it's gone up. This last week was slightly negative, but still in an upward trajectory. Silver, represented by the ETF SLV, same thing, in an upward trajectory, but silver, or SLV, unlike gold, is more exaggerated. It's exaggerated to the upside and it's exaggerated to the downside. It's just more volatile, but the general direction is the same as gold or GLD. When I put these on a relative strength chart, you can see silver numerator, gold denominator, you can see that they go up and down a lot. At times it favors silver, at times it favors gold. Right now we're in a slight pullback, which tells me it's this last couple of weeks, gold has gone down, but it's gone down less than silver. Bitcoin has been in a pullback for the last month or so. We have a Bitcoin model, or managed crypto model, so we got out of the market, and most of this we have avoided. It's not a steep decline, it's kind of a gradual anemic decline. But that's what it's done since the beginning of the year. The volatility index is showing basically downside volatility. So when stocks go up, the volatility index comes down typically, and vice versa. So you can see that this was back in October, the early part of October, kind of at the, I'd say the bottom of the market as we look back on it, the equity market, that the volatility index began to drop quite a bit. And so it was during the slight downturn in March, you can see it went back up. But generally speaking, it's been coming down, showing that there is stability in the market, in my opinion. Asbury Research, I'm going to show you three charts from them. One is, this is metrics for the 6 different factors that they measure about, is the market positive or negative. They look at it from 6 different perspectives and give each one of those a positive or negative, a green box or a red box. So none are negative at this point. The cross-asset relative performance chart showing, comparing the assets one to another, which one is stronger. So this is interesting. Stocks are stronger than bonds. You obviously saw that one strong. High beta, high volatility stocks are doing better than low volatility. On that sector chart that the dashboard that I did, you could remember the ones that were toward the bottom were like utilities and energy. Those would be low beta stocks, low volatility typically, and consumer staples, low volatility, and higher volatility stocks are at the top. So clearly, high beta is doing better than low volatility. Small cap, during this short period of time, has been doing better than large cap during the last week, the last month, the last quarter. Technology is doing better than the broad market, meaning the S&P, and growth is doing better than value. In the fixed income bond area, corporate is doing better than government. Government bonds, you saw that anemic chart. Corporate bonds are doing better. High yield is doing better than high quality, and short term is doing better than long term. U.S. versus the world. I think we've been about a year now, and I have yet to see a green box for the U.S. With whatever's positive going on in our market, our ETF SPY is not doing well enough to yet earn a green box compared to these 20-something countries or regions. The strongest ones are Peru and China for the last week, month, and quarter. Gold and silver. As I said, both are down. Gold is down about 0.3% for the week, and silver is down about 1% for the week. And the spot price of gold is $19.55 and silver $24.44. Clearly been moving up. Silver was in the teens and now it's 24. The gold-silver ratio is 80-1, which is favoring silver as a better buy. When you look at a monster box, and this would be not spot price, this would be if you want to buy something, you can buy a coin, you can buy an ounce or bullion if you want. You could buy a tube, or you could buy a monster box. A monster box is now selling for $13,385. That's 500 ounces of bullion, of silver bullion. So we saw the spot price of silver was $24.44. When you add the markup to that of $2.33, which is what it is currently, then you get the cost of $26.77 for 500. That cost goes up about 50 cents per ounce when you bring it down to 20 ounces. Source of my information is my son, Preston. The stocks just keep going up, for now at least, and so the bulls are commiserating. What's a down day? Thank you for watching. If you have questions or comments, leave them in the comment section below.